Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. And we are joined by the man himself, that is Rizwan Memon. Riz, how you doing this evening?
Doing well, sir. Yourself?
Oh, doing fantastic. Glad to have you here on webinar. It's been a couple weeks, but it's good to have you back. All right, guys. Well, let's go ahead and get started as we usually do. We're going to take a look here at the S&P 500, and you see we had hit our all-time high here at $4,545.85 on the S&P 500. And after that, we started to have the correction that we were all expecting, that we've been talking about for quite some time. Quite a little bit of a retracement here, but man, it wasn't much. And we kind of came down here, hit the 90 moving average and bounced right back up. Riz, what's your take on this? Were you expecting more of a correction, or is this about where your head was at as far as a correction is concerned?
Great question, Chris. So what I was expecting was, of course, I said 2 weeks ago that we could see a potential drop, and well, we did. Now, I said I gave a few key levels in the elite membership, all the way ranging from, the 4,400 level to, the 4,300 area. And you can see that I said, look, we could see 4,300, see if we can break below. If we can break below, then you know what, we can go lower. But if we get a bounce up from 4,300, you know what, it could continue, it could rally. And we saw that, it's a wick, it's not the candle, but you could see the wick come right down to the 4,300 area. And man, it's been a good solid recovery the last week. Is it something that's surprising? No. I felt like if we did get a bigger pullback, I wouldn't be complaining, to be honest. I definitely take the opportunity. I welcome it to be able to take advantage, right? For the style of trading that I do, for the companies that I look to purchase, it would be fantastic to get in these awesome companies at a greater discount. And we did see a little bit of pullback. We did start getting in. I am going to cover and share, 2 to 3 companies. Obviously, the elite members got the phenomenal value buy list. It's something that if people that have been in elite and you're watching this, the value of it. As it aptly is named, the benefit of it. That I don't know what it is, but every time I release one, it's like I release it when there's opportunities, like there were the last couple of weeks. And then when I do release it, because it takes quite a bit of work for me, because it's about, I don't know the exact number, but it's over 30, 40 companies that, I share certain points of whether they're good entry now or whether they'll be a good entry at a certain price point. And every time I release that list, it's like the market just picks up the next day afterwards. And this is exactly what happened. So I hope everyone that was able to take a look at the list, got access to the list, and elite took advantage or took some positions because they've done well. And I will share a couple names from that list for people that are watching who are not in elite. For whatever reason, if you're not in elite, at least I'll share it so people can get some value out of this as well.
No, it really is a huge benefit, guys. And for all of you guys who are here in Elite, you got some really, really good value out of that from that list that Riz shared. I know I personally got into one off that list, and I've been very happy so far. I can't complain. So for all of you who are watching, who are not part of Elite, if you're watching the replay on YouTube, guys, if you get the opportunity to get in on Riz Elite next year when we open up membership again, really ought to take a look at that, because this is where the money is made, guys. I know it's kind of scary buying when the market is selling off like that, but you got to remember, guys, that's the axiom: buy low, sell high. Well, we can't buy low if the market doesn't sell off at some point. So it's nothing to be scared about, and it is a healthy thing for the market. It needs to happen, and it definitely allows us, as Riz mentioned, to get into really rock-solid, amazing companies at a discount. All right, guys, let's continue. Let's go ahead and take a look down here at the breakdown of the S&P 500 here. And you can see the dip that we had, in the S&P 500 that we saw in the chart back here. This dip right here is represented by this dark, thick red line here. This is the SPY, the ETF for the S&P 500. So we see the dip here and the rise back up. And I think there are a couple interesting things to note here. Energy and financials just rallied hard. Really, really strong push and still outperforming the S&P 500. Both of these over 30% up on the year. Huge gains in energies and financials. Real estate taking a bit of a dive here. And once we get through here, I'm going to ask Riz about this because I think this is kind of interesting because real estate continues to sell off. Tech still just kind of hovering over the S&P 500 at this point, up 22.5%. The S&P 500 itself is up about 20%. Excuse me. Healthcare underperforming the S&P 500, but still green on the year, up just shy of 17%. And utilities kind of in the doldrums here, up at a paltry 6.5% at the time being. But I kind of wanted to touch on this because there's always some interesting things going on in the different market sectors. I kind of wanted to get Riz's opinion on what's going on here with real estate. Are prices going to be starting to come back down, or what's going on with this?
Yeah, so the real estate sector that we see in the market, at least, is a bit different to what the real estate market, whether it's residential market, geographically for someone who could be in Florida or could be in Indiana or could be in California or any different state, and if you're global, if you're watching from elsewhere, your local geographical real estate market is different to what we are referencing here in terms of the real estate sector. But the real estate sector, you're right, Chris, is down. It is kind of lagging now, energy and financials, and it's I wouldn't be surprised if it continues to pull back a little bit. Why? Because usually it had a great run. Now what we see certain sectors do well in certain market environments, and then in other times they kind of underperform. It was not uncommon for a real estate sector to underperform a very, very fast firing growing marketplace like last year. The S&P 500 had a great recovery from the lows last year, but real estate, I'm pretty sure, underperformed that. So just looking from the year to date, yeah, I mean, the real estate sector has made a huge recovery this year simply because the entire sector was so battered down, right? From everything that happened last year with COVID and, especially commercial real estate. And it's commercial real estate still hasn't come back, but the real estate sector that we're looking at in terms of real estate investment trusts, REITs, in terms of anything that, whether it's mortgage REITs or whether they're mall REITs or they are commercial or industrial REITs, these are all kind of fit into the XLRE ETF, which is the real estate sector for the S&P 500. Now, in terms of where it can go, I think I wouldn't be too concerned about it. Again, it is a bit detached to real estate housing market that everyone knows is running really, really, really hot, especially here in Canada where I am, but of course across various areas of broader America, and I wouldn't be surprised if it's the case, in certain pockets of Europe and whatnot. So, yeah, that's my kind of little bit of a clarification and insights around real estate.
Yeah, I think that's a really important thing to remember, guys, is when you're looking at this, it doesn't mean like real estate prices itself. And that's kind of why I asked the question, was to make sure that everybody knew the distinction between the ETF and actual prices per se in your local area. It's not necessarily the same thing. If real estate continues to go down, Riz, do you think this would be, a potential for entering into REITs or something along those lines for people who are looking to add their portfolio?
Absolutely. Absolutely. I love solid REITs. Now, there are certain REITs I'm avoiding. Like I'm avoiding like pure play commercial REITs. Like commercial REITs, like they own just plazas and strip malls. Like I'm avoiding those. But the types of REITs that I do like are residential REITs, right? Be these large, humongous, multi-billion-dollar firms that own and operate thousands and tens of thousands of individual different residential real estate properties, right, under their portfolio. So those are the ones I like. There's certain industrial REITs that are good as well. But the stuff that, like I said, I don't like touching on is commercial. And one that I don't like even less is office real estate. Now, office real estate, as we know, is in the doldrums. It's pretty much been hammered and not doing the best. It doesn't mean office spaces are going away, or real estate companies that deal in offices and own office buildings are gonna just go bankrupt. No, it just means that they're under a massive amount of pressure, because what do we know from last year? We know work from home is a thing. We know that not many people are or want to go back to the office space. We know because of COVID concerns, a lot of the companies themselves have delayed the return back to the office. So this means that we know for a fact that the office real estate sector is not one to be in for now, or maybe even for the foreseeable future, because we could see a big shakedown, and maybe some potential, I would say, I don't want to say bankruptcies, but some repricing for some of these office REITs if they haven't been done yet. Because I don't know what's going to happen with some of those buildings that are empty. They're essentially like ghost buildings. People are, the lights are maybe on, but no one's there, and no one's been there for months. And that's something I'd avoid. So in short, I would avoid, first and foremost, office real estate investment trusts, so office REITs, and then I would secondly try and avoid commercial REITs. But many of the commercial REITs are kind of in cahoots, and I would say combined with mall REITs, right? So many of the properties that are commercial also have to do with big malls. Now, malls aren't dead, but obviously we know they haven't been what they were even before COVID. Even before COVID, they were like on the decline, and COVID just kind of made that process a little bit faster. But malls will be around, but it's not something I'm too bullish on. So if it's a couple REITs that you want to consider in a real estate sector pullback, or even if the broader market pulls back once again, whenever that may be, consider some solid real estate, residential real estate type REITs. That's my kind of 2 cents.
I think it's a really good point, and it kind of speaks to overall macros in the market and the real estate market specifically, because I know I have several friends who I communicate with, very frequently, and they have no desire to go back into the office. And if one thing that COVID showed us was that a lot of jobs can be done from home and done effectively. And I think that that's something that is going to affect the future as far as, living conditions. I know a lot of people are moving out of the large cities and moving into, residential neighborhoods and things like that. And that, I know for a fact, has really affected real estate prices in my area. I can't say specifically to yours, Riz, but I know that there's been a huge exodus from the cities into the suburbs and things like that.
You're absolutely right. We've seen this across the board, I would say this applicable to broader North America, Canada, US, and other places in the globe as well, that people have flocked and left these congested cities where even getting parking is a mission, even, dealing with traffic, and they've left all that when they don't need to, because they don't no longer need to be in the office, and why stay cramped up in some condo. That's why there's been such a huge exodus towards um, suburban neighborhoods, and rightfully so. And this is one of the reasons why we've seen housing prices go up so much, because whereas someone was now living in a condo in a metropolitan city, is now looking at the outskirts, maybe an hour away or an hour and a half away even, at a nice cozy home, in a neighborhood where prices may have not appreciated much, and now all of a sudden the last year they are, and that's because of the supply and demand principle, right? So it's essentially the money is being shifted from these condos that are smack dab in the city, and now the money is moving towards these suburban neighborhoods. And then who's left holding the bag? It is the condos, the condo owners, whether they're REITs or whether they're individual landlords owning some of these buildings. They're in trouble, and there's already been a large amount of defaults and delinquencies and bankruptcies over the last year because of this. But I think eventually it's going to equalize. I don't think we're going to see the kind of demand that we have to be in the city, like live in the city like we did before. But I don't think it's the end of, it's not the end all be all. It's not the end of these, congested cities or these metropolitan cities, because it is a different feel. And I'm sure once pricing comes back down or stays down, people will go back, because now they're getting more value for money. They're able to renegotiate their rents. Like we've seen it happen a lot in New York City. Massive decline in average rent, per square foot or per condo, and eventually that's going to pick back up. People are going to be like, well, hey, I got to live in New York City, whether it's Manhattan, wherever, for this price, and it's 30-40% down from 2 years ago. Hell yeah, I'll move back to the city, right? So it's all supply and demand. It's amazing to see it happen in the real world, and in situations when it comes to just something as essential as a home.
Yeah, and for those of you who are watching the replay, our elite members who are here live, and if you are part of elite, why are you not here live? You got to be here. This is where it's at, guys. But yeah, I've got a couple of members here who are saying that they're seeing the exact same thing in their hometown. Sean is saying that Houston, Texas has seen a mass exodus to the suburbs. Ricardo is saying that same in Virginia and Southern Virginia, prices have skyrocketed. I can say the same thing here for Central Indiana. It's just gone kind of crazy. I live in the suburbs and I got in when it was cheap. So it's my housing value has gone up ridiculously. It's
Same here.
just nuts. Yeah.
Same here. There's a city probably 40 minutes or so away from me. It's a smaller city from where I am, here in Ontario, Canada, and the pricing on average houses has gone up just year to date 40%.
Wow.
That's whacked. I mean, yeah, there's something wrong. It's clearly wrong. That's not normal. The average increase in real estate on a national scale in real estate prices 2%. Okay. Average annualized increase in pricing 2%. Contrast that to some of the crazy gains we've seen in pricing. So there's no doubt that it's for many reasons. Granted, we also have a supply shortage here, and it's something that I'm just sharing an extreme here. Is it sustainable? No. Is it like that for all of Canada? No. But plenty places here, like there's the neighborhood I'm in, the city I'm in, and the pricing is on average home is about let's just say 800 to 900,000 per home average.
Wow. It's going crazy, guys, going crazy. All right, let's keep going. I think we've hammered on that enough. Let's go ahead and take a look at the black gold and the gold and see what's going on with some commodities here. So obviously when Delta, started making waves, we saw a bit of a pullback in oil here, back to the support level here around 61.60. Nice hit there twice. Really solid support there for oil, and it has rebounded very well. Riz, what's your take on oil? I know this is something that you follow very well, and I know we were able to capitalize on this bounce here with a great play. Do you think that people's fears of COVID are going down, and that's why more people are traveling, or is there something else going on?
Yeah, we've seen a pickup in oil demand, and we've seen that based on inventory. We've seen inventory come down for oil prices. Oil reserves in local housing storage in the U.S. So when we see a decrease in inventory, inventory numbers are released every Tuesday. Well, then what happens? That just means that, okay, less inventory means more demand. More people are using oil. So we've definitely seen that throughout that kind of summer. And now as we kind of move into the fall, a little bit cooler months, it's going to be interesting what happens, because generally I'm assuming people will be traveling, maybe less because school's back open now. But I'm also watching closely what the situation is with Delta. I mean, based on last winter, we know for the most part that we did see an increase in, mandates and maybe some shutdowns depending on where you live. So I'm wondering if we see something like that or potentially like that this winter. And if that happens, guess what? That's going to put demand pressure lower, and we could potentially see a pullback in oil. Nothing crazy, but we could see a little bit of a pullback. But that's if that happens. If it doesn't, if things continue this way, and thankfully, hope to God that Delta or whatever variant is out there isn't making a resurgence, then you know what? I think oil can stay around this 75. Between 75 to 80 is, I think, where it could go if demand continues to stay and OPEC does not, in fact, increase supply.
Absolutely, definitely something that we'll keep an eye on moving forward. And the traditional hedge against inflation, being gold, has really not been much of a hedge as of late. After we had this huge rally in gold last year, we kind of haven't done all that much this year. I mean, yeah, we've had some push ups and some push downs, but mostly trading sideways on gold. And obviously, as I mentioned earlier, gold, the traditional hedge against inflation, and inflation is obviously, of course, quite in the news here in the United States. What's your take on gold, Riz, and inflation in general?
Yeah, inflation is news and something that people are keeping an eye on. I think everywhere in their respective countries. Um, Now, as far as the remaining high and running hot, that remains to be seen. I mean, we did have a pretty decent print in inflation numbers for the U.S., and it wasn't as bad as expected. So that's why maybe the Federal Reserve, has some. Um, I would say reasoning for saying that perhaps it could be transitory, because if anything is to go by in terms of the last data release, maybe inflation could perhaps cool off. But aside to that, gold, you're right, has not operated as much of a hedge at all. In fact, I don't hold any direct gold type of holding, whether it's stock or an ETF. I don't really feel like I want to be in this area just yet, because it just doesn't make any sense. We've seen this move sideways. It's just not worth my time personally or my capital. I'd rather use it elsewhere. And I'm not saying I'm glad I'm right, but I mean, it's worked out so far, because it really hasn't gone anywhere much over the last few months.
Absolutely. And some things that people are really interested in, of course, is cryptocurrency. Let's take a quick look at Bitcoin here. After making a fantastic rally here in July, Bitcoin cooling off a little bit, making a very healthy pullback here towards the 90 moving average. Of course, you will note that crypto is being traded right now. Crypto traded 24/7, 365 at the current status of crypto. But yeah, Bitcoin looking to be in a bit of a downtrend, but hitting support here right around 41,000 or so. As always, guys, we don't actually have any positions in crypto. We don't recommend any positions in crypto. And if that's your bag, we highly recommend you take profit early, take profit quickly so that you don't get caught holding the bag like these people did here at 63,000, who are still hoping that Bitcoin comes back. But Riz, do you have any thoughts on crypto, or does that pretty much sum it up?
Yeah, you did a good summary there. I will say that the last couple of days, you see that big red candle, just like, let's say, 5 days ago, a couple of days ago, and especially 2 days ago, we see this pullback happening from news or catalysts out of China, where China is supposedly banning crypto. I know this news comes out again and again. Um, and you know what? It's I don't know if it keeps getting regurgitated. I don't know what it is, but China and banning and crackdown and crypto, these buzzwords are just thrown out so often. We don't know if it's new or if it's just being recycled again and again. But allegedly, that's what it is. They're trying to ban crypto. They're trying to I don't know, curtail it or limit it, whether it's mining, even to the extent where it's transactions, is from what I've heard. But yeah, so this isn't surprising to me, if it's pulling back from this level. The fact that it hasn't dropped lower, like the fact that it hasn't broken below 40K, is actually a pretty bullish thing. All in all, to see that even with all the catalysts, even with Chinese pressure, even with some of the slowdown and hype, it's still holding above that 40K level for now. It's great. If it hits around the 30K level, I'll tell you, I'll be the first to say that I'll consider getting in again. Okay, if it gets around the 30K level. So you have me on air, you have me in public here, saying if it gets there. If it doesn't, if it gets to 32.5, okay, I might consider then too. But give or take 30 to 32, 33K is when I might consider it. For now, it's still about 10K away from where I would consider. And I'm not saying I'm bearish Bitcoin or I don't like it or whatever, because a lot of people jump on me for that, but that's not the case. People need to realize that I'm looking at it from a purely unbiased technical and supply and demand sentiment standpoint, not because blockchain is the future or blockchain is going to fix the money problem or inflation. I'm not looking at it from any of those standpoints. So yeah, I think you touched on it pretty well, Chris, that it's holding around this moving average. I think if it can hold 40K, that's a pretty solid bullish, I would say, mark for crypto.
Absolutely, guys. Those whole numbers always big psychological support levels, and we can see that in real time here with crypto, and it definitely holds some weight as far as that's concerned. Now, Riz, you said you had a couple of tickers you wanted to take a look at. Let's see what's on your radar this week.
Yeah, awesome. So I actually have 4 stocks we're going to quickly touch on, and they are in fact part of the value buy list, along with dozens of others. But I picked 4 that I feel are good for an entry. Okay, right now, again, this is not a recommendation. I'm not telling you to buy anything. These are just my personal views on what I think is a good entry. And in fact, full disclosure, I have positions in all of these. Okay, so first and foremost, Merck. This is a big pharma company. Shouldn't come as a surprise to anyone. In fact, I got in probably a week ago, so you can see it was a good entry. It's since then had a nice, a little bit of a nice pickup. I continue to hold. This is a fantastic company. Again, I'm not buying this to carry for years. I always look at it from a few weeks to a few months standpoint. And if it gets anywhere around 76. You know what? I'm good. I'm good to take that money and run, because this is a great company. I don't mind carrying. And of course, if you know me, anytime I trade these large cap solid companies, I don't set a hard stop loss. Because there's just no point, because mostly you just get stopped out and eventually the trade works out anyways. So that's Merck. Another one I like is a company we've obviously all heard of, is Visa. Okay. This is also done well. I know I'm talking about it a little bit after the fact, but I got in all these, let's just say, middle of last week. I mentioned it. And again, great entry. Right. We did this live. Okay. We did this live in Elite, and a lot of people are happy and are doing well. So that's what I want. I want people to do well. Yeah, it was a solid entry. It's a great company. I think if it runs up to about 235, 240, I think I'm okay. I don't need it to go to 245, 250 to try and get out. I'm okay taking the meat of the move. So far, so good. Next, Fedex, FDX. This one's another amazing large cap blue chip stock. Absolutely hammered after earnings, which didn't go quite as according to plan. But this is, I think, a great entry. This could take a little bit longer to play out, because you can see that big gap down followed by a couple bearish candles afterward. So I got in on this. I don't exactly remember, but probably a couple of days ago. Market trading days, I should say. It's probably in the middle of the week, and a little bit lower, but I'm not too worried about it. Driving home the point that I don't have a stop loss. I'm not too worried if it goes lower. In fact, I might even buy some more. And this is something I'm comfortable holding for months and months at a time. And it's not something I'm too worried about, especially as we head into the holiday season. If we see a potential closing of the economy, fingers crossed we don't, but if we do, it will benefit FedEx, it will benefit things like UPS, it will benefit things like Amazon, and anything that's online shopping, online purchasing, because the theory is that if the economy or businesses are shut down or there's more restrictions again during the winter, they're going to buy stuff online, and that definitely benefits FedEx. So the second last suggestion I have is EA. Okay, Electronic Arts. For those of you that are gamers, this has done really well. I got into this on Friday, Thursday or Friday. It's had a nice rally on Friday, and this looks good. This good looks for recovery. It's gotten sold off significantly. It's right around that buy point, and I'm pretty comfortable carrying this. For those of you that are gamers that have been paying attention, one of the reasons that it did pull back is because Battlefield 2042 got delayed about a month from its October release date. So now it's coming November, I believe, middle of November. So I think, Battlefield 2042, if EA and DICE can launch that without too many hiccups, it can have a good, solid launch. And I think it'll do well, because based on sentiment and listening to people in the gaming community, I think everyone, including myself, is pretty excited for it. So yeah, I mean, I think it seems to be a pretty good trajectory heading into the holiday season for EA. Activision is next. Activision is something that I got in a few weeks ago, but has gone lower. We know this is not necessarily for anything specific to gaming, but it is to do with workplace culture, and this current lawsuit they're facing around workplace issues, whether it's a toxic work environment, certain other things, and that's still going on. And the reaction out of Activision management hasn't been too confidence inspiring for investors. This is why the stock has continued to go lower as the developments in this legal action continues. But as far as a company, in terms of their products, in terms of their revenues, none of that has changed significantly. I will say that the current Call of Duty is coming out. I think it's November. I think next month or November. I can't remember. I'm not too excited about it. It's a World War II shooter, Vanguard. Again, I'm not going to get into the gaming side, but ultimately, Battlefield is the one for me for this season and this year. Call of Duty might be something I very much pass up, and I'm sure many people see it the same way. That's my kind of 2 cents on that IP. But as a company, in terms of their products pipeline, I don't think Activision's in trouble per se. They just need to get past this hurdle of the legal side of things, make some adjustments, and then I think the stock has some great upside. So even if it gets to around 84, 85, I'm great take profits around there.
Also, don't forget, for all my retro gamers out there, Diablo 2 Remastered should be coming out here fairly soon, if it's not out already. I know that's definitely on my radar, to say the least.
Great plug. I've seen that too, the buzz around that. But yeah, those are the stocks that I have. So hopefully, whether you're an elite or not, you enjoy these 5 stocks that I brought to the table for you to keep an eye on and do your own research and decide if you feel like you want to make an entry. But full disclosure, like I said, these are companies that I hold along with others.
Absolutely. All right. So we got some questions already coming in. Ricardo says, what about UL? It looks like a downtrend, waiting for the breakout, to be honest. Let's take a look at good old Unilever. Yeah, I mean, definitely in a downtrend. Riz, what are you seeing here? I don't know if this one's quite ready yet.
Yes, I agree with Ricardo in terms of a big downtrend, waiting for a breakout. Yes, this thing is a great, a solid company. It's just we do obviously want to factor in some technicals as well. So if you're more technically inclined, if you're looking to get a little bit more of a precise entry, you could definitely wait, and see if it can break out of that $55 area bullishly. Right now, it doesn't look like that. If you, on the other hand, are okay with buying and waiting, a few weeks, few months without even worrying about it at all, then yes, now wouldn't be too bad of a potential entry. Again, do your own research, do what's right for your account and risk management. But I feel like this isn't, it's not a growth company. It isn't a company that's going to shatter expectations. It isn't something that's going to come out with a crazy new product. They sell household items, right, that we all need and use, but they're not going to recreate the wheel. So just know what you're getting yourself into. Okay.
All right. Mahrad, looking to go to the value menu, wants to know about McDonald's. What are you thinking on McDonald's? Looks like people are buying those Big Macs.
Yeah. Yeah. McDonald's has done extremely well. I have personally not taken a position because it's right around, as Chris highlighted just now, it's right around that resistance point. I personally avoid getting in at a resistance point or a previous high, uh, simply because I feel like I rather have a little bit of more margin of safety baked in. I rather have something more value baked in the price. Right now, doesn't mean to say that McDonald's can't go higher or that it's a bad company or that it's overvalued. I'm not saying that. I'm just saying that from a technical standpoint, which I do incorporate into predominantly swing trading. I rather just wait, and if it comes down to the 236 area, then that's when I'd get more excited for an entry. But for now, not quite.
Yeah, I can say from personal experience, for when I was back in doing the whole day trading thing, that you will always see a lot of activity around all-time highs or inflection points like this. And you can see that here on Friday. I mean, this is a fantastic rejection off of this previous all-time high. Of course, they made a new one, and then it sold back off underneath that. So yeah, if you're buying here, this is a straight chase, and usually that's not something you want to do. Now, it can work. Don't get me wrong, it can work. We could open up on Monday and, McDonald's could push up to, 248, 249. But it's risk. It's a big risk. All right, Matthew wanting to trim down on his grocery bill here, wondering about Dollar Tree. Ooh, Dollar Tree getting beat down.
Yeah. Yeah. This is something we've traded before a couple times after the last earnings, which it had a big gap down. I would not bother touching it. It's not something I'm too bullish on. The reason Dollar Tree did really well is because they were right in that kind of area where many stores were closed. People needed these little items, and what better place to go than your local dollar store franchise, and that's what kind of really led them to beat expectations and do well in 2020. Now that things have changed over the course of the year, and maybe things are normalizing in terms of retail shopping, in terms of in-store openings, and now all of a sudden, people are not too turned off by going into these big box stores like Walmart and so on and so forth. So that's what kind of impacts Dollar Tree negatively. Because if someone's going to Walmart, yeah, it might not be $2 for what they're buying, maybe 225, 230, 250, but at least they don't have to go somewhere else. They can just buy it all and put it in their grocery cart, shopping cart at Walmart, right? So not something I'm too big on in terms of an entry on Dollar Tree. But Walmart, on the other hand, I do like.
Let's go back to that. I just brought it up because you mentioned it, but
Yeah.
Walmart really basing here. Nice bounce off the 200 simple moving average. That could be something we keep an eye on here.
Yeah.
Awesome. Matthew has another one. He wants to know how you feel about TakeTwo. I know this is one of your favorites.
Yeah. This is another great one to enter. I'm just a bit hesitant on it because we know TakeTwo, the parent company of Rockstar, which makes the Grand Theft Auto games, they, let's face it, do not have much of a pipeline. Take-Two is a publisher. They have other games, obviously, too, but there isn't too much to be excited for right now. I know there's GTA 5 coming again on this current gen, next gen, if you want to call it. But that's not something that's exciting to me. But at these price points, yes, it's worth an entry. But if you have things like EA and Activision that you want to buy, you don't need to have yet another gaming company, a gaming publisher you want to take a position in, because I mean, you don't want to spread yourself thin. So if you have a position in EA or Activision or both, Take-Two isn't one that I would take. You know, it would be a third for me if I had to pick out of those three.
Yeah, the one thing you always want to remember is to make sure that you're diversified. You don't want to be too heavy in one area. So that's definitely, a good point, especially with Activision and EA looking so good. Okay, lots of questions tonight. Sony is the question from Ricardo. It says he just took some profits. Yeah, that's a good idea, because that is what I call a parabolic move. Holy cow. But yeah, really hitting all-time highs here, or getting pretty close to it, or at least this high here that I can see. But yeah, I'm not getting in this. This is way too far extended.
Yeah, I would agree. The fact that you're taking profits is good. It's always great to have these kinds of moves happen when you're already in the stock. But to enter now or any of this sort, no, I'm okay, paying attention elsewhere and watching if this can drop below. Yeah, again, just my thoughts.
Yeah, Ricardo, great trade if you nailed that one. Make sure you don't let whatever you have left go red. Make sure you close that for profit or at break even, so that you go green on the trade for sure. All right, Yas gave us a lengthy question, wants us to take a look at SU. I know this is one of your favorites because you've been asking about this one, I think, for the last 2 weeks. Yas wants to know, can we touch on SU on the TSX? We pushed through old resistance at 25 last week. Would you consider an entry at this point?
Yep. This is looking good, definitely, especially if we see oil prices stay up and stay around the 75 plus, 75 plus area per barrel, because that benefits many of these oil producers like Suncor, Exxon, Chevron, and all that kind of stuff, right? So it is looking good. It's looking strong. Would I take a position right now? That isn't an ideal area to take a position, but if you feel like, you're bullish on oil, then this is not a bad company to play oil with, right? They pay a bit of a dividend. They're pretty decently solid company, and they've been around for a long time. And you can do much worse than Suncor if you want to get into playing a bullish comeback in oil.
Yeah, absolutely. A 20-cent dividend is definitely not anything to shake a stick at. I would definitely take that. Just being mindful of the 200 guys here, it does seem like it is rejecting that right at the moment, but it could push through that on Monday. That's not a guarantee, just something to take note of. All right, Mahrad wants to know about Lemonade. I know you have traded this one in the past, Riz.
Yes, Lemonade. Yeah, this one is a bit of a tricky one. I mean, yes, it's more of a recent IPO. It's hovering and consolidating around that current 67 area support with the secondary long-term support of 60. I don't see an entry yet. I don't have a position. It is something we've traded before. It can run nicely when it does pick up, but right now I don't see a great entry, especially with some solid blue chip large cap companies that, like I've mentioned, that have that are good opportunity for entry.
Yeah, definitely. Me personally, I'm not liking it just yet, but this seems to kind of cooled off. Yeah, we have these big moves, but really not much going on with it. I see some other people typing. We'll take a few more questions, and then we can call it a night. I see Yas is typing. If it's anything like his last, here we go. If REITs are to pick up again, is RDFN a good play? Well, let's take a look. Redfin Corporation.
This one I've heard of, but I've actually never looked into it, Jazz. I've never looked into the fundamentals and whatnot. But just based on technicals alone, right now it looks pretty good. I'm not saying to go out and buy it, but based on your question, if we do see a pickup in REITs, yeah, this could be something just from a technical standpoint. I'd have to look into it on a fundamental standpoint, how good the company is in terms of its cash flow, in terms of its holdings, and I don't even know what kind of REIT it is, if it's holding residential, commercial, plaza, industrial, I don't know, right? So I definitely need to do my homework on that before I can tell you if it is absolutely a good REIT to pick up. But just based on okay, so Jazz says, okay, it's a Redfin as a full service real estate brokerage. Okay, they've benefited a lot from the pricing in real estate pricing because they take a cut, right? I will say that personally, okay, if it's a brokerage, so they're related to obviously real estate. I personally feel like real estate brokerages as we know them for the long term are a bit of a dinosaur. That's my personal view, because people are now realizing that why should I pay a broker, a real estate agent, and thus the brokerage, a ginormous amount in terms of a percentage. Uh, Maybe not so, but from a dollar standpoint, 2, 3, even 5% on a home sold is significant, right? Nominally. So people are realizing, why should I pay these people who are essentially just, matching up two people? They're just, reaching into their Rolodex and just matching up a buyer and seller. They're not really doing much. Why would I pay them so much money? And again, there's nothing against real estate agents, but I just feel like if there's an industry that's ripe for, I would say, disruption, and it's already happening. And if you want to know what disruption is, look into Zillow, because that's exactly what's happening. And Claire just comes in and corrects me. It's a disruptor. They share. Uh, they split the cost with you. Well, that's very interesting. I'd be curious to see how that goes, and how that works. But you know what? If it's something that is changing up the real estate brokerage and the real estate agent business, then I'm all for it. And if Redfin is doing that, it's in the real estate area. A and B, it's doing things in a way that, yes, obviously, makes it benefits its agent, but it also isn't, frankly, ripping off the home buyer and a home seller. Then I'm for it. And to me, Zillow is one of those disruptors, the classical disruptor of, an online app-based, easy to use, and platform that will even buy your home. And I'm not going to go into the details of if they're going to pay you the cash of a good fair market value, but they will even buy your home. And Zillow is really, really big. They've taken a lot of market share in terms of homes sold, especially across US and North Canada. So hopefully that answers your question. And great point out to Claire in terms of sharing with me and providing me the insight around what Redfin really does as a disruptor in the real estate market.
I got to say that I have to kind of agree with you, Riz, that the way to sell a home anymore is done online. I actually have a friend of mine who owns a digital staging business. They digitally stage photos for online listings. So it's definitely the wave that things are going. With buying everything online with Amazon or Walmart online or whatever it may be. Definitely things are moving more towards going more digital. All right, well, I'm not seeing any more questions, so I want to thank everybody for coming out, and huge thanks to Riz for coming out tonight. I really appreciate all of your great insights. And guys, when we open up Elite membership again next year, guys, you got to get in on this. This is just the tip of the iceberg. This is just the cool webinars that we get to do every week. What you don't get to see if you're not a member is what goes on our channel, and that value list that Riz posts when we have dips in the market like we did earlier this week. Guys, that is worth its weight in gold. And I think all of our Elite members are capitalizing on that. So just want to say big thanks, Riz, for setting up this community, and hope that if you're listening and you haven't been able to get on this, make sure that you do next time we have it open.
Thank you, Chris. Thanks for having me. Thanks for running the show week in, week out. And of course, thank you to our wonderful elite members, each and every one of you that's either been with us or has joined us recently, and of course for those of you that come on to these webinars with your questions and with so enthusiastically live, which is amazing. And last but not least, to everyone that's watching the recording, whether it's time, scheduling reasons, time reasons. And if you're not in elite, like Chris says, definitely keep your eyes peeled for next year. Again, we still have a few months till we consider even opening. I can't promise that it will happen in the beginning of next year, but it's not happening this year, and I stand by that. I gave people enough chance. Hopefully, everyone that wanted to get in got in and stays in. But yes, thank you so much, everyone. Have a great rest of the weekend.
And as always, we will see you in Discord on Monday. Good night, everybody.